Bitcoin is holding steady around the $77,000 mark today, as the broader cryptocurrency market shows signs of a slowing recovery, prompting investors and analysts alike to question whether this consolidation phase is setting the stage for a significant breakout, or if further turbulence lies ahead. In a market known for its volatility and rapid shifts, this moment of relative stability demands close attention from anyone tracking digital assets. Welcome to Crypto Hub, your trusted source for in-depth cryptocurrency insights and market updates. Today, we delve into the current dynamics surrounding Bitcoin's price action, the factors influencing the broader crypto ecosystem, and what this could mean for the weeks and months ahead. As we examine the latest developments, Bitcoin continues to demonstrate resilience by maintaining its position near $77,000, despite various macroeconomic pressures and internal market forces. This level represents a critical psychological threshold that has acted as both support and resistance in recent trading sessions. Market participants have watched closely as the asset hovers in this range, with daily fluctuations remaining relatively contained compared to the wild swings seen earlier in the year. This holding pattern comes after a period of recovery attempts that have lost momentum, leaving many to wonder if the market is simply catching its breath before another upward surge or if underlying challenges are mounting. The total cryptocurrency market capitalization reflects this tempered enthusiasm, with altcoins showing mixed performance and overall trading volumes indicating a degree of caution among traders. To understand the significance of Bitcoin's current stance, it is essential to look back at the broader context of the 2026 market cycle. The year began with heightened expectations following previous bull runs, yet various global events have introduced layers of complexity. Geopolitical tensions, including uncertainties around international trade and energy markets, have contributed to a risk-off sentiment that affects high-volatility assets like cryptocurrencies. Additionally, institutional involvement has grown substantially, with major players such as MicroStrategy continuing aggressive accumulation strategies, amassing hundreds of thousands of Bitcoin and reinforcing a long-term bullish outlook even amid short-term consolidation. This corporate buying has provided a floor under the price, preventing deeper corrections that might have occurred in previous cycles without such steady demand. At the heart of the current situation is the slowing recovery that many analysts have noted across the crypto space. After initial gains earlier in the spring, momentum has tapered off as resistance levels around $78,000 to $80,000 proved difficult to breach consistently. Trading volumes have moderated, suggesting that while buyers are present to defend key supports, there lacks the aggressive conviction needed for a sustained rally. This slowdown can be attributed to several interconnected factors. First, macroeconomic indicators play a pivotal role. With interest rate decisions from central banks remaining in focus, investors are weighing the potential impact of monetary policy on risk assets. Higher for longer rate environments tend to pressure speculative investments, and crypto has not been immune to this dynamic. Inflation data releases and employment figures have also added to the uncertainty, leading to choppy price action as market participants adjust their positions accordingly. Furthermore, the regulatory landscape continues to evolve, influencing sentiment in meaningful ways. Discussions around clearer frameworks for digital assets have progressed in various jurisdictions, offering potential tailwinds for adoption. However, the pace of implementation and any associated compliance costs create a wait-and-see approach among some institutional entrants. On-chain metrics reveal interesting patterns during this period. Bitcoin exchange balances have trended downward over time, indicating that long-term holders are moving coins into cold storage rather than selling into the market. This supply squeeze could become a powerful catalyst if demand reignites. Network activity, while not at peak levels, shows steady usage for transactions and decentralized finance protocols, underscoring Bitcoin's foundational role even as attention shifts toward newer innovations in the sector. Delving deeper into technical analysis, Bitcoin's price chart displays characteristics of a classic consolidation phase. Candlestick patterns over the past several weeks show repeated tests of the $75,000 to $77,000 zone, with buyers stepping in at lower levels to prevent breakdowns. Moving averages, including the 50-day and 200-day, are converging in a manner that often precedes larger moves. Relative strength index readings hover in neutral territory, neither overbought nor oversold, which aligns with the overall market fatigue observed after months of volatility. Volume profiles indicate significant trading activity clustered around these price levels, suggesting that market makers and large holders are actively defending this range. Should Bitcoin manage a decisive close above recent highs, it could trigger stop-loss orders and algorithmic buying, potentially accelerating upward momentum. Conversely, a break below key supports might invite more aggressive selling, though strong institutional bids could limit the downside. The question on everyone's mind remains, is a bigger move coming next? To address this, we must consider both bullish and bearish scenarios with balanced perspective. On the optimistic side, several fundamental drivers point toward potential upside. Institutional adoption continues to accelerate, with spot Bitcoin exchange-traded funds recording net inflows in recent periods despite occasional outflows tied to profit-taking. Sovereign interest, including rumors of strategic reserves in certain nations, adds another layer of legitimacy and demand. Technological advancements within the Bitcoin ecosystem, such as improvements in Layer 2 scaling solutions, enhance its utility and could attract more users seeking efficient, low-cost transactions. Historically, periods of consolidation following halvings or major market events have often preceded substantial rallies, as weaker hands exit and stronger conviction builds among remaining participants. If global liquidity conditions improve through rate cuts or fiscal stimulus, Bitcoin's correlation with traditional risk assets might work in its favor once again. Experts from various firms have shared their outlooks, painting a picture of cautious optimism mixed with realism. Some analysts highlight the potential for Bitcoin to test $85,000 to $90,000 in the coming months if resistance levels are cleared, citing improving ETF flows and corporate treasury allocations as key supports. Others warn of extended consolidation or even mild corrections, emphasizing that the asset has already experienced significant appreciation in prior years and may require time to digest those gains. Paul Tudor Jones and other prominent investors have reiterated Bitcoin's value as an inflation hedge and portfolio diversifier, which could sustain interest even in sideways markets. On the flip side, concerns around broader economic slowdowns, potential regulatory hurdles, or shifts in investor risk appetite could delay any major breakout. The interplay between these forces creates a complex environment where patience and thorough analysis become paramount for market participants. Beyond Bitcoin itself, the broader cryptocurrency market's recovery slowdown offers additional insights. Ethereum, while maintaining its position as the second largest asset, has faced challenges in generating the same level of enthusiasm, partly due to competition from newer Layer 1 and Layer 2 networks. Altcoins in general have underperformed during this period, with many trading in tight ranges and exhibiting lower volatility than seen in previous bull phases. This rotation of capital back toward Bitcoin as the market leader is a common occurrence during uncertain times, as investors seek the relative safety of the flagship cryptocurrency. Decentralized finance protocols continue to show innovation, with total value locked metrics providing a gauge of real-world usage that persists despite price fluctuations. Non-fungible tokens and other sectors have experienced more pronounced corrections, reflecting their higher beta nature relative to the overall market. It is worth exploring the role of derivatives and leverage in shaping current price action. Futures open interest has moderated after earlier spikes, suggesting reduced speculative fervor that previously amplified moves in both directions. Liquidations, while still occurring during sharp intraday swings, have not reached the cascading levels that characterized past downturns. This more measured approach indicates a maturing market where participants exercise greater caution with positioning. Options markets also reflect this, with implied volatility levels remaining elevated but not extreme, pointing to expectations of continued choppiness rather than immediate explosive movements. Understanding these mechanics helps explain why Bitcoin holds at $77,000 without breaking out or collapsing dramatically. The balance between supply and demand has reached a temporary equilibrium that requires a catalyst to disrupt. Looking at historical parallels can provide valuable context for what might unfold next. In previous cycles, Bitcoin has endured lengthy periods of consolidation before embarking on parabolic advances, often surprising skeptics with the speed and magnitude of recoveries. The 2024 to 2025 period saw substantial gains fueled by institutional entry points like ETFs, setting a new precedent for how the asset behaves in a more regulated environment. However, each cycle carries unique characteristics, influenced by global events, technological maturity, and investor psychology. The current environment, marked by higher institutional participation and improved infrastructure, suggests that any future move could be more sustained and less prone to extreme drawdowns. Yet it also implies potentially slower ramps as the market digests larger capital flows without the retail-driven frenzy of earlier years. Economic indicators from around the world add another dimension to this analysis. Strong performance in certain equity markets contrasts with pressures in commodities and currencies, creating cross-asset dynamics that crypto investors must monitor. The strength of the US dollar, for instance, often acts as a headwind for Bitcoin priced in that currency. As central banks navigate inflation targets and growth objectives, their policy decisions will likely influence capital allocation toward or away from risk assets. In emerging markets where cryptocurrency adoption serves practical purposes like remittances and hedging against local currency volatility, demand remains robust and provides underlying support independent of Western market sentiment. This global diversification of use cases strengthens Bitcoin's position as a truly international asset. Community sentiment and social indicators also warrant attention in assessing potential future moves. While not always predictive, shifts in discussion volume, fear, and greed indices, and on-chain activity from retail wallets can signal turning points. Currently, conversations reflect a mix of frustration with the slow recovery and determination among long-term holders who view dips as accumulation opportunities. Educational content and analytical resources have proliferated, contributing to a more informed participant base less likely to panic during consolidations. This maturation of the ecosystem bodes well for stability and could facilitate smoother price discovery in upcoming phases. Developers and core contributors continue advancing the protocol, with upgrades focusing on security, scalability, and energy efficiency that address past criticisms and broaden appeal. As we consider the possibility of a bigger move, risk management strategies become essential for investors navigating this landscape. Diversification across assets, position sizing appropriate to individual risk tolerance, and staying informed about both technical and fundamental developments can help mitigate potential downsides. Dollar cost averaging remains a popular approach during uncertain periods, allowing participants to build exposure gradually without attempting to time the market perfectly. For those with longer horizons, the structural shifts toward greater institutional integration and real-world utility suggest that Bitcoin's role in portfolios may continue expanding regardless of short-term price fluctuations. However, no analysis is complete without acknowledging uncertainties, and prudent investors always prepare for multiple outcomes rather than betting on a single narrative. In examining specific price levels that could act as inflection points, the $74,000 area has proven significant as near-term support, with historical buying interest emerging around there. On the upside, clearing $80,000 convincingly would represent a technical victory and could open pathways toward $85,000 and beyond. Fibonacci retracement tools applied to recent swings highlight these zones as natural targets for mean reversion or extension. Candlestick confirmation, combined with volume surges and positive momentum indicators, would strengthen the case for bullish continuation. Conversely, sustained trading below $75,000 might test lower supports and invite reevaluation of the broader trend. These levels are not arbitrary but emerge from the collective behavior of market participants over time, making them critical reference points for traders and investors alike. Broader adoption trends further support the potential for meaningful moves ahead. Integration of cryptocurrency into traditional financial systems, including banking services and payment processors, continues to progress. Companies across sectors explore blockchain for supply chain transparency, asset tokenization, and decentralized applications that solve real business challenges. This utility-driven growth complements the speculative aspect that has historically dominated headlines, potentially leading to more resilient price floors. Educational initiatives and regulatory clarity in key markets reduce barriers to entry, encouraging participation from demographics previously on the sidelines. As these developments compound, the network effects inherent to Bitcoin and the wider crypto ecosystem strengthen, creating a foundation for future appreciation that transcends short-term market noise. It is also important to address the environmental and sustainability aspects that have influenced perceptions of Bitcoin. Advances in mining practices, including greater reliance on renewable energy sources, have mitigated some criticisms and positioned the asset more favorably among environmentally conscious investors. This evolution aligns with global sustainability goals and could attract capital from funds with ESG mandates, further diversifying the buyer base. Such factors may not drive immediate price action, but contribute to the long-term narrative that supports sustained interest and investment. Analysts who incorporate these qualitative elements into their models often arrive at more nuanced forecasts that account for societal shifts alongside pure financial metrics. Turning attention to potential catalysts that could spark the next significant movement, several events stand on the horizon. Upcoming economic data releases, policy announcements from financial authorities, and industry conferences often serve as triggers for repricing. Technological milestones, such as successful protocol upgrades or major partnerships, can also shift sentiment rapidly. External factors like breakthroughs in artificial intelligence or changes in global trade dynamics might indirectly influence capital flows into or out of crypto. Monitoring these variables allows for proactive rather than reactive decision-making. While no one can predict outcomes with certainty, the weight of evidence from historical patterns, current fundamentals, and expert consensus suggests that the current holding pattern at $77,000 may indeed precede more decisive action once conditions align. In synthesizing all these elements, the cryptocurrency market finds itself at a crossroads where patience and vigilance are equally important. Bitcoin's ability to hold near $77,000 amid a slowing recovery highlights both its strength and the challenges it faces in breaking out to new highs. Whether the bigger move materializes as an upward surge driven by renewed institutional enthusiasm or requires additional consolidation to shake out remaining uncertainties remains to be seen. What is clear is that the underlying drivers of adoption, technological progress, and macroeconomic interplay continue to shape an evolving landscape full of opportunity for those who approach it thoughtfully. Investors and enthusiasts alike would do well to maintain a balanced perspective, staying informed through reliable sources while avoiding emotional decision-making in response to short-term fluctuations. The coming weeks promise to be telling as various forces converge on this pivotal price level. Market participants should watch closely for signs of increasing volume, positive divergences in technical indicators, and news flow that could tilt the balance. For the long-term believer in Bitcoin's value proposition as digital gold and a store of value in an increasingly digital world, this period of relative calm may represent an opportunity rather than a cause for concern. As always, thorough research and risk awareness form the bedrock of successful navigation in these dynamic markets. CryptoHub remains committed to providing comprehensive analysis to help you stay ahead of developments and make informed choices in your cryptocurrency journey. Thank you for joining us on CryptoHub for this detailed examination of Bitcoin's current standing and the potential paths forward. We encourage you to stay engaged with the latest updates and consider how these insights align with your own investment strategies. Until next time, keep informed and invest wisely. This has been a professional update from CryptoHub.